Alrighty. Well, happy Monday, everybody. My name is Luke Robinson, and I am a new business advisor here with Collective. And Collective is your all-in-one back office platform for solopreneurs. So essentially, we do the whole shebang when it comes to solopreneurship. And more specifically, we're an S corp company. So, if you came on board with us, we'd make form your business for you, set up an LLC, make an S corp election, and then provide a payroll processor, and then provide ongoing bookkeeping um, as well as tax support throughout the year and business tax filing at the end of the year. So when it comes to the S corp, we pretty much do it all. Now, but today is a fun event, of course, that we like to call Tax Tuesday. So essentially, it's just it's an AMA, about taxes, about business optimization, or how to optimize the finances, or any sort of questions like that. So feel free to ask away. But real quick, let me just kind of get the disclaimer out of the way here. Keep in mind that this is purely an informational session. Please don't consider this, legal advice or tax advice. Like I'm not an attorney. I'm an enrolled agent with the IRS. So this stuff, could be wrong. The tax code is complex. I could be saying some, incorrect things here or there. It could not apply to your situation. So, before you do anything for your business, it's really important to, consult a CPA or a tax attorney before acting on any sort of, random, stuff you hear on the internet. But let's go ahead and get started. I already think that we have some questions that are rolling in. And the first one is, what is the difference between an LLC and an S corp? Well, here's the thing. There's a lot of people that kind of have a kind of a, I guess, sort of the wrong idea about what an S corp is, or kind of like a misrepresentation about what an S corp actually is. An S corp is a tax election. So it's not a business entity, like an LLC or a corporation. It's a way to elect with the IRS how to be taxed. So, for example, like you have to be something like an LLC before you can even elect S corp tax status with the IRS. So, and this is why you would possibly want to do that. Before you become an S corp, a huge chunk, or in some cases, the entirety of your net income is subject to the self-employment tax. Self-employment tax, it's a flat tax rate of 15.3%. Before you become an S corp, or like I mentioned earlier, before you make an S corp election, all of your net income is subject to that tax rate. So, for example, let's say that in 2024, let's say that your net income is around $100,000. Before you made an S corp election, or before you became an S corp, however you want to say it, how you come up with your self-employment tax is you take $100,000 and you'd multiply it by 15.3%. Um, but what happens with an S corp election? And reminder, that's paperwork filed with the IRS. That's done with the feds. And essentially, what happens is you become an employee of your own business. You become, a W-2 employee of your own operation. And, since that's the case, since you're an employee, it's only natural that your business will pay you a salary. Now that you're an S corp, the business will pay you a portion of your earnings to yourself in W-2 wages, in salary. And the cool thing about S corps is that the only chunk of your earnings that's subject to the self-employment tax is your salary. So, for example, like we mentioned earlier, let's just assume that that someone makes $100,000 in net income, and let's also assume that a reasonable salary for someone, in which, by the way, that's a requirement for the S corp, is that whatever you pay yourself in salary needs to be reasonable. But in this situation, let's just assume that the reasonable salary is around $40,000 net income, something like that. How you come up with the self-employment tax with an S corp is only that first $40,000 is subject to the self-employment tax. The other 60 is a distribution. That's the technical name for it. And that 60 grand, is no longer subject to the self-employment tax, that chunk of money. So, for example, essentially, how you come up with your S corp tax savings in this situation is you take 60 grand and you'd multiply it by 15.3%. And what is that? I mean, I should use my handy dandy calculator. I'm a tax guy. I should be able to do this in my head, but I still can't. But that comes out to a total of $9,180 in savings with an S corp. How can I prepare for the April 15th deadline? That's a good question. Well, if you're self-employed, get your finances organized and together. That's one of the best things that you can do. Is if you need to conduct some bookkeeping, and some expense cleanup, and that's what I would do. It's just a lot easier to file your personal return if you've got your books in order. And also too, how can you prepare? Let's say that if you owe some taxes, or you expect to owe some taxes for the April 15th deadline, it might be a good idea to start preparing to, get some money together for that, whatever you need to do. Because if you don't pay it by that deadline, you could face penalties. So those are the two main things also, if you're employed, like if you're W-2 working for someone else, it's a good idea to find your W-2 form. So you'll have it to prepare your return when you're ready. What happens if I don't file for an extension? Okay. So essentially, if you don't file, for one, if you don't file for an extension, the IRS just assumes your return to be missing. So eventually they'll start sending you letters, requesting that you file your return, whatnot at some point. But also too, keep in mind that if you don't file for an extension and you owe taxes, then when you finally pay them, you should owe failure to file penalties, which are a lot steeper and more expensive than failure to pay penalties. So it's always, if you can, even if you can't pay your tax bill, it's always a good idea to file your return, even if you can't pay it. There's less in penalties, and it's just better for you. And eventually, let's say that you don't file for an extension, and let's say that you just kind of never file your return. The IRS eventually might file what's called a substitute for return. It's called a SFR, and essentially the IRS will file a return for you, without any sort of business deductions or anything that you might, be entitled to. And you can owe a lot of money as a result from that. So it's usually a good idea to file your returns as soon as you can. Usually. What happens if I file it on April 16th? I mean, technically that's a late return. Like if the filing deadline, whatever year, if the filing deadline falls on April 15th, then technically that's a late return for a day, and you could get charged some penalties. Might be little, but there still could be some penalties involved. I got a letter in the mail from the IRS saying I owed money. Is this from this year's taxes or last year? I mean, it kind of depends on what it says in the letter. It should refer to and indicate the tax year that the tax balance refers to. But I'd be a little surprised. I mean, and again, what I'm getting ready to say could be wrong. It could be for this year's taxes. But I'd be a little surprised if you got a letter that soon from the IRS from a current tax bill. Because also, too, we're not even at the tax return deadline yet for this year. So I'd be a little surprised. So I'm willing to bet. I think it's probably pretty likely that it's a letter from a year past. All right, here we go. Here is another. Are there any situations where you wouldn't want to be an S corp? Yes, there are a couple situations where you wouldn't want to go the S corp route. So the S corp, essentially, one of the big reasons that you'd want to, or really the entire reason why you'd want to make an S corp election, is to save on the self-employment tax. But there's certain things that typically aren't subject to the self-employment tax, and that includes passive income. So, like, typically things like, um, rental property income, stocks, proceeds from stocks, bonds, all of that. That's usually not subject to the self-employment tax anyway. So there wouldn't be a reason to put that under an S corp, if there's no self-employment tax to be saved on. So that's one reason. Another reason is that you might not want to elect the S corp status is if the amount of money that you can, I guess, expect to save from the S corp, if that would be below the service fees you'd pay a professional to handle the S corp administration, then, like, what would be the point if it was more expensive for you, to pay to run the S corp than it would than it saved you overall. So at that point, it wouldn't really be worth it. So I think those probably are the two main reasons. What's different with S corp filing for April 15th? Well, the April 15th is the personal return deadline. There actually was a March 15th for current LLCs for the current tax year. There actually was a March 15th deadline to make an S corp election. Thankfully, it's still possible to make a late S corp election because it's possible to make a reasonable cause argument, to the IRS as to why the election is late, and if it's a good reason, even though those typically get approved, but it's best practice from to get in that election as soon as to that date as possible. So, but those are the two different dates. But also too, there's also a March 15th deadline for the S corp tax return. Because when you make an S corp election, a business return, kind of comes into existence, and that one's due by March 15th as well. What are some of the top things we need to know for filing this year? Well, if you're self-employed, I would just know, what's able to be written off. Just make sure that that's, appropriate and, is an allowable expense from the IRS. And, make sure that the business expense, it's called, what they say is the business expense needs to be ordinary and necessary, for your course of business. So, that's important when you're filing this year, especially if you're self-employed, because it's not a good idea to be writing things off you shouldn't be. And then, top things you need to know is filing by the deadline. That's really important because who wants to pay penalties and interest and all that kind of stuff to the IRS? Not me. So filing by the deadline obviously is a thing you need to know. And then just make sure that you use some really good tax software that's reliable, that can help you file the return. And if you're uncomfortable with that, then it might be a good idea to get a hold of a CPA or a tax preparer to help you file a return. Oh, at what point of not paying your taxes can you go to jail? Ooh, that's an interesting question. Well, first of all, before I say any of this, I'm not a tax attorney. I'm not an attorney at all. So don't consider this legal advice or anything like that. But technically, I believe not filing a tax return is technically illegal. Now, I think that it's pretty uncommon for them to, go criminally after people for not filing their returns. But I think technically it's illegal to not file your return. Also, too, kind of when you go to jail is when you do some serious, tax evasion, which is never a good idea. Never do that. And essentially, it's when people try to willfully kind of evade their taxes. People that hide millions of dollars from the IRS, like that's kind of when you're going to jail. Usually, if you just owe a tax balance, just from simply not paying your taxes or getting behind on your taxes, they'll want you to pay them back and go to payment plans and things like that. But typically, it's usually not treated as a criminal, but in some cases it can. What are our taxes used for? Ooh, well, that's a good question. Well, it kind of depends. A lot of our taxes are used for our defense budget. A lot of money goes to the U.S. defense budget, and also a lot of money goes to entitlements. To Social Security, to Medicare, and programs like that. And the self-employment tax, like the tax that you're trying to save on with an S corp, is just another word for Social Security and Medicare taxes. You know, that's what the self-employment tax is. So that 15.3%, 12.4% of it is Social Security, and 2.9% of it is the Medicare tax. So self-employment tax is literally just the 15.3% Social Security and Medicare tax, and that tax rate goes to fund our Social Security and Medicare programs. Yeah. And then just things like infrastructure and just other government contracts. There's several things that our taxes are used for. How can I write off crypto gains? Well, usually, and again, I am not an expert in crypto. I've never handled any sort of tax transactions for crypto. So like, don't take this as official advice. Definitely seek out a professional for uh, for uh, sort of like ways to proceed in the crypto. But essentially, you can't really write off crypto gains. Like I believe that you can offset crypto gains similarly to a stock, in the sense to where, let's say that your crypto, you sell some of your crypto at a loss, um, and like you literally sell some of your crypto at a loss, and then later on in the year you make some gains on crypto. I believe the losses can kind of offset those gains. But again, talk to a tax professional before you do anything about that. Do you have two separate returns when you become an S corp? Well, actually, yes, you do. So when you make an S corp election, you now have a sort of business return that kind of comes into existence, and that one's due on March 15th of every year. And the technical name for it is an 1120S tax return. That's the S corp tax return. Um, now, the S corp tax return, that's due uh, before the personal return. It's due on March 15th. The personal return is due on April 15th. So what you'll do is you'll file your personal return, or I'm sorry, you'll file your S corp return first, and then something called a K1 form will be issued. And you kind of think of the K1 form as kind of like a W-2 form for the business. You take the K1 and input numbers on your personal return, file that one. So they're kind of connected in that way. What kind of businesses does Collective usually work with? Well, Collective is kind of a niche company focused on, sort of the consultant, or someone that's providing a service. So I speak to a lot of marketing consultants, business consultants. Um, I speak to a lot of software engineers, online creators, uh, writers, uh, bloggers. Like, I mean, there's many businesses that Collective can service, but we mainly focus on those core businesses. Also, too, single member LLCs. We kind of focus on those and specialize on those. So we don't currently handle partnerships or anything like that. Uh, but single member LLCs we do. Should any entrepreneur become an S corp? Not necessarily. There are some situations to where you don't need to be an S corp. And kind of like I mentioned earlier, one of those is if your income sources, whatever activity you're doing, if that income source isn't subject to the self-employment tax, then you don't need to be an S corp. Because there's no money in the self-employment tax to save on. You know, so that's one thing. Things like rental properties, stocks, bonds. Usually those don't need to be an S corp. And another thing is, let's say that you've got a really high W 2 job and you're making some money on the side, from your side business doing whatever, and you're trying to determine, whether or not an S corp election makes sense for you. Let's say that you're making $200,000 in your W 2 job, and then you're making $100,000 in your side business. Remember that the self-employment tax, like the entire tax that we're trying to save on here with the S corp, is another word for Social Security and Medicare taxes. So literally, but like keep in mind though that the Social Security portion is by far the largest portion of the self-employment tax. It's like 12.4% of that 15.3%. When you work a W-2 job, like for someone else, you still pay the self-employment tax in effect because you pay the Social Security and Medicare tax. It's even the same tax rate. Like it's even 15.3%, but the difference is your employer pays half of it for you. Just by law, they have to pay half of that tax. However, keep in mind that the Social Security portion of that tax rate actually caps out at around 168,000 and some odd dollars for 2024. So after you reach that cap and income source from your W-2 job, you won't pay that portion of the self-employment tax on any of your side business income. So therefore, your self-employment tax drops from 15.3% to 2.9%. So if you're making $100,000, your self-employment tax drops from $15,300 to $2,900. So it's you're paying a lot less on the tax, and therefore it becomes less worth it because to do an S corp because there's less money to save in the self-employment tax. Okay. Can a partnership make an S corp election? Uh, yes, they can. So a partnership is essentially two or more people on an LLC. Long story short, that's what a partnership is. And a multi-member LLC can still elect the S corp tax status. So that's certainly possible. Yeah. And what would happen, especially if they were both active partners in the business, is usually both of them would go on some sort of salary, and you'd have distributions that each partner could take too. Tips for new business owners in 2024. Well, tax tips, definitely. I mean, one of the most important things that I think I can probably say is to remain organized. You know, keep your business books organized, like keep all your expenses categorized throughout the year. Don't wait until the very end of the year to do that. And another reason why it's not a good idea to wait till the end of the year is you're technically supposed to be paying your taxes throughout the year. And if you're self-employed, you usually have a requirement for quarterly estimated tax deposits. So the only way that you can kind of figure those out is if you're handling your bookkeeping and accurately including your net income. Coming up with because you're only taxed on your net income. After your expenses, after you write off your business expenses and deductions. So really, the only way that you can accurately calculate your estimated tax deposits each quarter is if you have an accurate net income. You have an accurate representation of your income and your expenses. So that's some good tips is to get organized and of course stay organized. And another thing, and I know this sounds kind of like a fairly obvious tip, but another thing is to pay your taxes. That's another one. It's not fun, especially with self-employed people like you. When you're making a bunch of money, you can really easily and quickly get behind on your tax bill, and owing $100,000 in the IRS. It's not a fun time. So just keep that in mind too. Also, to another tip I would say is, you might want to set up and it depends. It's a good idea to consult with a lawyer too, but it's sometimes a good idea to set up an LLC, for your business if you don't have one already. In some cases that can provide, asset protection and kind of, separation from your business. So that's usually sometimes, not always, but usually it's a good idea. Okay, I think I have time for one more question here. What is an operating agreement? So an operating agreement is essentially the document behind your LLC. Like it's the document that kind of that lays out who owns the LLC, how it's managed, how it's structured, just kind of like a record for your LLC. That's the operating agreement. And today, that is all the time I have for Tax Tuesday. And of course, it's a pleasure to do this every week. It's a pleasure to see you all. And please, if you think that collective might make sense for you, or an S corp might make sense for you, schedule a call with us. Go to the collective website, fill out the tax calculator to see how much you could save potentially, or send us a message on Instagram or other social media channels, and we'd be happy to set up a call. But I will see you all next week for another Tax Tuesday.